Okay, this is your Frontier Opening Bell Friday, the 6th of May. Welcome to the show, everyone. A very brutal Thursday for markets on Wall Street. $1.3 trillion sell-off in European and Asian markets opening this Friday, looking tepid following that vicious market rout. But let's see how today pieces are. But this is how a number of African markets finished off on Thursday. The Nigerian market escaped that rout by 1.42% on the back of the consumer goods and big names such as MTN climbing 6.1% on the NGX All-Share Index. The Egyptian market also roared to the end of the week, which is the end of its own trading week in Cairo, 3.07%. The South African market melted. The financials, industrial and resources indices finished in the negative territory. The rand fell against the dollar by about 3.08% to about 16 on the trading board. That's how the South African finished up. Again, that was in correlation with the rest of the developed markets. Then you find the BRVM down by 65. And of course, the Nairobi Ports continued in the negative territory since the start of the week till Thursday, 1.15%. Push that aside. Let's move on quickly to the news box where the authorities in Kenya are looking at setting new rules or drafting new rules to ensure there are more listings on the Nairobi Securities Exchange. The Minister of Finance reporting that the country posted about 7.5% GDP for last year. In the meantime, the AFCFTA is asking all Africans who are in the creative sector and the SMEs to come for what it calls a brand hackathon. The whole idea is to promote made in African goods and services to the rest of the world and increase the share of intra-Africa trade. That's what the AFCFTA headquartered in Ghana is asking all of you to step forward and do. In the meantime, Tanzania is facing fuel prices at a new high because of the problem in Eastern Europe. Fuel prices are also up in Uganda. That is also up in Kenya. There's a fuel crisis, all on the back of oil prices that surged above $111 yesterday. That's for the London Brent crude after OPEC decided to leave all parameters unchanged on Thursday on the back of the crisis in Eastern Europe and global demand supply metric. And to say China, the economy is slowing down a little bit and inflation rearing its ugly head across markets around the world, leading to interest rate hike this week by the Fed, 50 basis points in the US and 25 basis points yesterday by the Bank of England. All of that of consequences for Frontier Africa. They've got Mauritius selling about 2.2 billion worth of rupees in 2027 bonds at 3.1% yield. Ethiopia says coffee exports soared 78% to about $894 million in 9 months ended the month of March. That's good news. You can take that as your cup of coffee. But that's good news, by the way. Congratulations, folks. Let's get on to the West Africa, where the World Bank says it's going to adjust its international benchmark to determine who is living below the poverty line. The new figure will be $2.15. The initial figure years ago, decades ago, was below $1 a day. Then that was moved to about $1.50. Now the World Bank says it's going to adjust that threshold to $2.15. That is what the news is all about. OPEC has agreed, as I said earlier, to 432,000 barrels per day in the market by the month of June, sticking to existing numbers among member states after the EU proposed a ban to Russian oil that could come as early as next month, with France and Germany leading the rest of the Western European countries. Then, of course, you have the FMDQ. Yesterday listed the agro-allied industry company Dufil Foods Nigeria, 30 billion Series 5 and Series 6 commercial papers. It's been a very heavy week. This week announcement came from Dangote Cement. It completed its 160 billion naira commercial paper offering as well. Now, Cameroon this week hosted the vice president of the European Investment Bank, and they're looking to cooperate more fully with the EIB in terms of projects, infrastructure, development, and everything in between the French-speaking West African country. Then you've got the EMEA borrowing to dip about $263 billion year on year to about $1.6 trillion for the 30 developed economies within that region. That's according to a report this week by S&P Global Ratings. The borrowings by sovereigns around the world is expected to jump this year to about $20.4 trillion, according to that report from the S&P Global. Keep those numbers in mind and keep an eye on what's happening to sovereign borrowings. Let's get on to Southern Africa. Toyota reporting that the flooding, that catastrophic flooding in KwaZulu-Natal will likely keep its plants in South Africa closed for at least 12 weeks moving forward. In the meantime, the South African GSE, which is Africa's largest securities exchange, is looking at relaxing the rules or requirement for listing on the market, in particular, costs that relates to compliance with what are called post-listed requirements. Now, the GSE is looking to relax those rules and see more listings. A number of companies have delisted from the GSE over the last few years, and the trend looks to continue. And ArcelorMittal says it's doubling its 2022 share buyback program to about $2 billion, while Goldfields on Thursday reported that its output for the first quarter, January to March, was about 580,000 ounces of the bullion. And Rand Merchant Bank has named a new CEO that will be effective October the 1st. That's Nigeria's Independence Day, by the way. Emery Brown is the new CEO, and we say congratulations ahead of taking office. And Zimbabwe, not a pretty good news, may once again default on the $1.75 billion that's due to white farmers. It's called those white farmers compensation. Zimbabwe defaulted last year, and now with the crunching FX situation and exchange rate to the volatility to the downside for the local currency and shortage of inflows, it's likely that the President Emerson Mnangagwa's administration may find it difficult to make that payment. That is already being flagged for everyone. Okay, let's talk about North Africa. Yes, that's where it all started. That's the news this morning. Egyptian authorities reporting 1.46% GDP surplus for its fiscal 2021-2022. How did they do it in the land of the pharaohs? You can read that up, but that's quite a surprising deal to report a surplus still in the year of 2021, the pandemic, 1.46%. And Abu Dhabi's ports, it says it signed deals with Egypt to build a number of ports, multiple ports along the coastline of the North African economy. Morocco has gotten accolades from the International Monetary Fund for the way the North African economy handled those support for the during the COVID-19 pandemic era. In the meantime, Morocco is reporting its phosphate exports doubled to about $2.4 billion in first quarter. Nigeria has some deal with Morocco when it comes to phosphates and fertilizer. Then you've got Tunisia reporting export volume down 7.5% for the month of March, and that effectively wrapped up the first quarter of the year for the North African economy. And that's it for today, Friday, the 6th of May on Frontier Africa Reports. I am Bosi Namafai. Thanks for watching, everyone. See you next week. Remember, you can watch this show again on our YouTube at Frontier Africa Reports. We've got a whole lot more on our website at www.frontierafricareports.com. Go on social media, on LinkedIn, on Twitter, on Facebook, on Instagram, and you can read up and see some of the materials we publish for the continent on those platforms. Bye for now, and see you next time.